Kranthi Bathini joins us this morning. Kranthi Bathini, equity strategist at Wealthmills Securities. Thank you so much for your time. Markets were expected to open a little better this morning with the Nifty indicating a gap up opening. But what we're seeing is absolutely flat trade, no real movement. In fact, markets opened in the red and have barely slipped into the green. What are you making of the investor sentiment at this point?
There is a complete risk aversion we are witnessing, Kartik, at this point of time. Investors are wary about the market at this point of time, trying to be on sidelines in the medium to short term because there is no clarity. The news has been so much volatile. That's the reason. And look at the crude oil prices, how volatile in the last 10 trading sessions. Today is the 16th day of the war. There is nobody, there are a lot of uncertainty is emerging at this point of time. That is the reason some kind of a aversion towards the equity market at this point of time for the most of the investors. That's creating the low volumes in the market, and also we are seeing these kind of a moves in the opening of the trade. We need to see how the day is going to progress in the next couple of hours. That's where we can see some kind of a clear directional moves to the market.
Of course, wait a couple of days, if not a couple of weeks, depending on how long this conflict in West Asia continues to rage on. Meanwhile, stocks on the move in the positive territory this morning seem to be a mixed bag, but the momentum really coming, in fact, the bullishness of investors really coming in for the non-energy minerals. For some reason, we are seeing a fairly handsome uptake in steel stocks, aluminium stocks and cement stocks this morning. And of course, a little bit of gains even in some banking stocks like HDFC Bank and SBI. I want to first talk about JSW Steel, Tata Steel. Both the stocks are up. In fact, Tata Steel up almost 0.9% right now as we speak. JSW Steel up about 1.3%. Ultratech Cement is up about 3% or so. What is moving some sort of momentum in favor of this particular sector, the non-energy minerals, Kranthi?
Karthik, if we see the main focus at this point of time going ahead is government infrastructure spending that's expected to go up. Normally, ahead of the summer, we tend to see some kind of up moves in sectors like cement and as well as metals are concerned. That's where we are witnessing at this point of time. These are the sectors expected to do well in the next coming couple of quarters. That's where we are witnessing some kind of a bounce back and buying interest is emerging in the cement as well as metals are concerned. Both are by and large domestic oriented sectors, and they are much more insulated from the external shocks in the medium to short term. That's where we are witnessing some kind of a buying interest in this sector.
Is that the reason you would also attribute to the positive movement we are seeing in ITC and Bajaj Auto? Again, inward-looking sectors, domestic sectors, fundamentals continue to be strong, no real fears of inflation or economic slowdown at the moment, at least till as long as the government continues to protect, passing on the rising fuel prices to consumers?
Yeah, absolutely, Karthik. That is the reason we are witnessing some kind of a buying interest that's emerging with respect to the domestic oriented sectors. As you rightly mentioned, ITC, despite of the recent worries on the GST and even the healthcare, this sector has been resilient. And from the time, apart from barring the recent war crisis, but the time the tariffs are announced. From the time the domestic healthcare sector has been doing very well. So the domestic oriented sectors have been quite resilient in these kind of markets, Karthik.
All right. Okay. But look at the power producers and the power distributors. That is where the pain seems to be coming from this morning, Kranthi. Again, everybody understands that the conflict in West Asia is likely to spike up and keep fuel prices elevated at elevated levels. Now, whether it settles at 105 or 110 or 150, I think nobody really knows for sure right now. But input cost for power producers is going up, and that is something which is likely to reflect negatively on their bottom lines, isn't it?
Yeah, we have witnessed some kind of a buying interest in these sectors in the last week because of the expected demand for power is concerned, but as well as it's going to dent on the margins in terms of the raw materials are concerned, that can be naphtha and the fuel is concerned. That's where we are witnessing some kind of a consolidation in the stock in the medium to short term.
All right. I want to focus specifically on the BFSI sector now, and this BFSI sector has been pretty much volatile given the exodus of FIIs that we saw last week. Now, today we are getting mixed views from here, Kranthi. While stocks of HDFC Bank and SBI are both up more than 1% in trade, we are seeing some weakness emerge out of ICICI Bank and Axis Bank. Is there a sectoral sort of headwind which is looking more so towards some private sector banks like ICICI and Axis Bank as opposed to SBI and potentially even HDFC Bank?
One thing is, market has been waiting, okay, how this entire episode is going to play in the next coming quarters. The main reason the banking is under pressure is because of the clear-cut selling by the foreign portfolio investors. But in the medium to short term, the DIS have been the net buyers every day in the trade. And going ahead, how the credit growth is going to be, that is extremely crucial. So we can see some kind of a divergence and some kind of a cherry picking in these stocks, as you mentioned rightly, HDFC and SBI is concerned. But we need to wait and watch for some more time how the results are going to be. But we are seeing some kind of a bottom fishing in the banking and financial service space is concerned. Still, the main key impact for the banking and financial services is FII selling is clearly creating some pressure in the medium to short term.
Right, so it is FII pressure which is weighing down on the BFSI stocks. I also want to talk about the oil marketing companies, and of course we have been keeping a close track on how prices are moving in this particular sector. And again, this morning I think the selling just doesn't seem to end as far as the top three Indian Oil Corporation, BPCL and HPCL are concerned. Even this morning those stocks are down on average about 3% or so. We understand, Kranthi, that there is obviously a lot of pressure on the bottom line of these companies, but remember, these companies already also have fairly strong balance sheets and P&L statements, given the fact that when crude oil was actually lower than $60 a barrel, the sort of reduction in retail price was not really passed on to the consumers, even though the government was collecting something called the windfall tax from these companies back then. Overall, how stressed are their books likely to be if this conflict continues to be a long one?
I think if the oil prices are going to be at elevated levels, above $100, definitely it's going to create some kind of impact. As you rightly mentioned, they have strong balance sheets. They witnessed the markets and witnessed the oil prices around $150 per barrel in 2007 and 8 kind of a time. And there have been volatile movements for these stocks and for oil prices of these companies are concerned. As we are heading to the election season in the five states, whether the oil prices are going to be increased or not, or these oil marketing companies have to bear that pressure of the increased oil prices, that's going to create some kind of a sentimental impact and real impact on the profits of these companies in the medium to short term. So that's where we are witnessing at this point of time pressure on these companies and selling pressure on these companies in the medium to short term. They're strong businesses, but medium to short term, they need to feel this pressure.
All right, there is going to be a medium to short-term pressure. Long-term, of course, as always, is a question of how long the war is going to last. Finally, I also want to take a look at the logistics sector. And, this is a sector, again, a sector which is very, very directly impacted by the longer routes and in some cases the restrictions on shipping lines across the country and beyond. In fact, not in the country, but beyond the country in other parts of the world, not just to the Gulf, but even shipments going to Europe and US largely restricted with the Strait of Hormuz being closed. I'm looking at stocks of Concur. I'm looking at GE Ship, which is the biggest hit, in fact, down about 4.5% or so. And even companies like Blue Dart down about 1.5%. But on the contrary, the airline, Interglobe Aviation, Indigo stocks are up about 1.5%. So have you seen the worst of Indigo's decline as far as at least, the conflict in the Gulf is concerned? And have investors already priced in the movements of Indigo? And more importantly, the logistics sector, are they likely to remain battered?
Indigo has been quite resilient, Kartik. Even we witnessed the exit of the CEO, but they have promptly announced the rise in the fuel surcharge that can withstand their margins in the medium to short term. but we need to see how the demand is going to be. Is there any postponement of travel, or what kind of impact it's going to have on the demand? It is premature to say. By and large, they made a timely move of increasing the adding the fuel surcharge. That will give some kind of a recovery for the margins in the medium to short term. But we need to see how the demand is going to pan out in the next coming couple of weeks. That is extremely crucial. The remaining logistics stocks are concerned, we are witnessing some kind of a, this has become a news driven activity. Some kind of a high volatility we are witnessing in logistics stocks in the medium to short term. We need to see how this entire episode is going to be, because there are some kind of a favorable news sometimes and some kind of a adverse news. The source of information has been so much volatile that has been creating some kind of impact on these stocks in the medium to short term.
All right, of course. And you mentioned the fuel surcharge, of course, pain for flyers and passengers, but definitely some gains visible for investors when it comes to the Indigo stock. Meanwhile, remember, Indigo happens to be pretty much the only sort of listed company in India in the airline space which is impacted by the war in West Asia. Meanwhile, on the screen right now, Sensex and Nifty absolutely flat trade in the first about 15 to 20 minutes odd of markets opening. No movement at all in Nifty 50 and Sensex, pretty much stuck at those levels of about 23,137 for Nifty 50. Sensex absolutely flat at about 74,500. Well, Kranthi, not sure if investors are liking what they're seeing on the screen, but unfortunately, that's all we have time for this morning. Thank you so much. As always, pleasure having you here with us on News9.